This is just a friendly reminder that my trades are mine alone and they should not be taken as financial advice, but simply for educational and entertainment purposes only. I am not a financial advisor, tax professional, or legal professional. To make any significant financial decisions, you should contact a financial professional. All right, and with that, let's get on with the video. Hey everybody, it's time for another options video. I opened another credit put spread today, and here it is. This is the one I opened today. I opened a one that has a 64-day expiration, so it expires March 31st, and it's this one here. So to sell it, I bought to sell the selling leg, the short leg. It's for $665. This one here. We scroll all the way down, and this takes forever. But we'll get here soon. And here it is. This is the one that we opened today. And then, so I opened a $665 to sell. And then we bought the put for $655. And it's this one here. And it has a delta of 0.20. And the one we're selling has a delta of 0.25, which is close enough to 0.30. I could have gone a little bit higher, but that's the way it worked out. And so let's go look back at the history of the account. And we go to the history. If it opens today. So, and we go down here to pending. And I received 148 credit. I mean, it got filled at 1.48 right here. So that's the continuing SPY put spread campaign, SPY credit, because I'm always receiving a credit for this. And that's what we have today. Is a we got $148 today. Of course, unlike the other options channels here, I'm not just gonna say this is a credit and that's what we received. That's what we received today, but by the time we close it, if we close it at a profit, we'll probably close it at 50%. So what is that, around 74? Yeah, $74 is, if we close at 50%, that's what it should be. And if you guys want to take a look at the Excel sheet, or not the Excel sheet, the Google sheet that I have, and we'll open it right now. Drive. Here in Google Drive. this is the latest open that I have. See, it opens today at 1:26, which is today. It should close at 3:31, but the managed date is at 21 DTE, so that would be 3:10, March 10th, 2026. And it's for SPY. It's one contract. Remember, a contract is 100 shares. And the long strike, the one you buy, is for 655. The short strike is for 665, and we received a credit at the open of 1.48, so that means $148. And this is our capital at risk, and this is what we would receive if we are able to close it at 50% of max profit. So, and I have this here, the limit price to close. I have it at 0.74. I put this here so that I can understand what I need to set the limit price at, so that I don't have to worry about managing this trade. I do have to manage it when it comes to 21 days DTE, because Robinhood doesn't give you the option of closing or managing positions on a specific date, but they do give you the option to manage a position if it hits a certain price. So I have a closed position option that will execute if the price of this option reaches this point, this limit price. So, and then of course I'll put in what I made here, and this is a running balance. This is the probability of profit. And this is days in trade. So it was open today, so it's been 0 days in trade. And I have 43 days until 21 DTE. And this is return on investment. We don't know that yet. Annual return on investment, which is just the previous sell multiplied by 12. And the trade is open, has an open status. And this is what we have is captured. All this gets completed once the trade is closed. And to my surprise, we only have 3 open SPY positions right now. And one was rolled. So that upset me because I didn't mean to roll anything. So the one that we closed for 1,318% of annual ROI, this one that we got 28.90 return on investment, and we made $289, which is not really, because that position was rolled, and now the position is down by almost that much, is down at 210 or something like that. So just remember, if you ever roll a position, all you're really doing is closing one position to open another, and you hope that you receive a credit when all the math is done. So you're not making double the profit when you roll a position. You're simply closing one out to open another. So yeah, and so this was the one that was closed, one here. Yeah. This one's the one that was closed. And it was to open this one. And it was done inadvertently, but that's neither here nor there. And this one, the last one, is a position that was opened intentionally. So, and on Wednesday, I'll put out a video where we open either a QQQ credit put spread or a QQQ broken butterfly wing. Hey, let me know in the comments which one you guys would like to see. Alright guys, that's all I got for now. I'll talk to you all in the next video.